Today, the 30-year Treasury breached 5% in yield, and the 10-year got as high as 4.88. Does that mean we're going to see the stock market collapse and the housing market collapse as these things take off? Well, stick around through the end of the video. I'll talk a lot about that as we move along. Good morning. My name is Adam Kahn, and I'm the Rational Investor. Today is Friday, October 5th, Unemployment Day. Pretty exciting news and pretty excited information. Before I forget and before I get into it, do me a favor, hit that subscribe button, smash that like button. I really appreciate the help. It helps Google and YouTube's algorithm and helps more people find the channel. The other thing is I've been putting links in the descriptions for opening up an account with Sofi. You can open up an investment account, and there's also one to open up a checking and savings. If you do it and fund the account with $10 or more, you get an extra 25 bucks, and they send a little bit to an account that I opened for my 12-year-old son. So it's really cool. He'd be super excited, and I'd appreciate that as well. So the unemployment numbers came out today, crushing expectations, way hotter than expected at 336,000 jobs created, totally shocking the markets. The stock market crashed, the bond market crashed, sending the 30-year yield rate up above 5%. And then it's only a few hours later, and the market has totally reversed. Stocks, last I looked, the Dow was up 300 points. The bond market had eased off a good bit. To me, that's the capitulation I keep talking about. And when I looked at individual stocks, they really didn't breach yesterday's low. They just looked real scary after the number came out, much hotter than expected. This would obviously indicate that inflation is still running rampant and the Fed's going to raise rates, right? Well, if you go to the CME webpage and take a look, there's still a 73% chance that the November meeting they're not going to raise rates, which tells me the data is still flawed, that there are things that the Fed and everybody else is seeing that's saying that inflation is not as bad as we think, and the things are not as bad as people anticipate, and the stock market and the economy are doing okay. As I keep saying, it's all noise. As interesting as it is and as fun as it is to look at the data points, try to ignore all the gloom and doomers and just keep your head down, go to work, earn money, save, and put it away. And don't be scared to put it away into stocks and bonds and real estate and whatever else it is that you like. Now, keep in mind, I say this all the time, I am just a YouTube idiot. Don't listen to me. You got to do your own research and make your own financial decisions. I don't want anybody coming back and saying, well, the rational investor or Adam said this or that, because quite honestly, I'm just sharing the information I've found over the years. I don't want you guys making any decisions based on that. But my goal is constantly to earn a living and put away so that I can retire comfortably. There are plenty of things I'm comfortable investing in that can generate additional income, that if I can put money in dividend stocks or if I can buy bonds and have enough money to help cover the bills or at least supplement the bills once you add Social Security and everything else back into it, that I shouldn't have to stress so much. Now, I do just because I want to save more for my kid and I want to make sure my wife's okay, and I constantly worry about what happens if something happens to me. But that's just me. Like, realistically, I know if you get to the right amount of money that makes the income you need to live the life that you're living, you have to keep in mind inflation, so you can't cut it too tight. But there are products out there that are pretty safe investments that you should be able to rely on them. I know yesterday I did my video on how to double your money in a short amount of time. I hope you all know that I don't really think that's the way to invest or to even try to do that stuff. I think it's a big mistake. I find if people risk too much money to make too much money, they generally lose their money. I hate to ruin the excitement. I hate to put a sad face on whatever anybody's hopes is. But slow and steady tends to win the race. I mean, it's the tortoise and the hare and all the other stuff. And I hate to say all those things that our parents say and everybody suggests tend to be what works out. And I know it's not exciting, and I know we all wish we could have zillions of dollars and it could happen tomorrow, but you got to just go to work, do your job, save money, and be happy. Enjoy your free time when you can, but don't be over extravagant. Don't go crazy. Putting away is really important, at least to me. I want to know that one day I can retire comfortably, and we are still living a comfortable life. We get to go on a vacation. We have our cars and they run just fine, and we live in a nice home. I think that's something everybody can do. And I think it's really valuable to invest. I watch all the gloom and doomers, and there are lots of them I like. I really like that guy Travis. Bonkers. I think he's a really nice guy, and I think he really means well. I like Michael Bordenero. I think he's great, really level-headed. This guy Jerry Abbott I watch too. I generally watch him to get some ideas of saying things that I might disagree with. But I find him really entertaining, and I like him, and I think he probably believes what he says. But I'm just not as bearish to the market. I think the things that the other people point to are legitimate. If you want to talk about housing, there is a lack of inventory. And as interest rates go higher, it makes it more difficult for the builders to build more homes. I don't see a huge influx of properties. I don't think the bans on Airbnbs or the things that are being done to try to stimulate and get some inventory put to the market are really going to be a huge solution. I do think the mortgage rates going higher have slowed it down, and I think it's done exactly what the Fed wanted. I think we'll probably stagnate here. Maybe we come down 5, 10, 20%. In some places it's gone up, but I don't think that's the end of the world. I do worry that the commercial real estate has some bigger cracks in it. But the interesting thing is those players are so big. What I talk about is if you're BlackRock, you're going to get to dictate the rules. If Adam Kahn and a buddy of mine owned a commercial property, yeah, we'd probably be in trouble. Fortunately, I don't. But for the bigger companies, I don't know what they'll do. My guess is they'll kind of be in default to some degree. Maybe they'll get a 6 month or year extension on whatever loan they currently have so that the banks keep getting payments because they won't want to actually default on those loans and the banks aren't going to want to actually own all those properties. I mean, they learned from 2008 they're not in the real estate business and that's not their ultimate goal. They just want to lend money and get payments. I don't know if the Fed will have to step in and give some sort of support to make sure that they aren't all crushed. But I don't see it happening the way that the gloom and doomers see it, where it's going to be this big catastrophe when all that property has to readjust. I think that the banks and the owners of those properties and the companies are well aware of what's coming and are already working on solutions so that it doesn't impact the economy so terribly. I guess we'll see. But I totally love how the markets reacted today. The news sent them in a spin. Like, really, the stock market collapsed. It looked like panic caught itself. And now it's reversed on a day, on a week that's been a rough week. The Dow made a low for the year. Like, there are lots of things that people could point to that sound so terrible that look awesome to me. Like, that's exactly how you want bull markets to look. They climb a wall of worry. People are scared. The economy is scary, but things keep going higher, and we all keep shaking our heads because it makes no sense. I hope that goes on for the next 5 or 10 years. Anyway, do me a favor before you forget, before you go, give a thumbs up, subscribe, make a comment. Like, really, I got no issue with anybody who tells me where I'm wrong. I really don't. I like to debate. I like to argue. I'm sure my wife would tell you I love to argue. She probably thinks I argue anything. But I got no problem if you tell me that the market's going to collapse and here's why. I do know there's a lot of good data points that make good make sense, but I think that's always the case. The reason the market's going to collapse always is logical. It always has good data points. It always has things that you can point to. And why it goes up, I don't know. It just does. And it continues to get bigger and bigger. In fact, think of it this way. Sorry, I know I keep rambling. The higher inflation goes, the more money companies make. So the stocks should go up higher too, right? I mean, if there's inflation and the parts to build a car cost more, they're going to raise the price of the car and the margins will go up and the profits will go up. The only problem is when the demand stops. And we all hear the news about the problem is the demand isn't stopping. So, anyway, again, have a great day. Have a great weekend. I'm sure I'll chat this weekend as well. And, bye bye.